So in this video, we're going to take a look at Forex trading for beginners. We will start this video off by taking a look at what is Forex trading, what is the Forex market, what makes the Forex market special, and why is it an attractive market for traders. After that, we will, try to learn and understand the concept of currency pairs, which is a key concept in Forex trading that is important to understand. And in the end of this video, we will also take a look at some trading strategies, some Forex trading strategies for beginners. And real quick before we start here, I have to give a disclaimer that this video is for educational purposes only, and nothing in this video is financial advice. But alright, now let's jump right into the video. Alright, so first of all, what is the Forex market? Well, Forex basically stands for foreign exchange market. And this market is all about currencies trading against each other. So this is a market where we trade, different currencies from different countries with each other. The Forex market is by far, the largest market in the world, with trillions of dollars trading every day. And the market is also open, 24 hours every day except for weekends. So this is a massive market. And there's no surprise here that we're seeing, a lot of traders attracted to this massive market. We have definitely lots of trading opportunities here. And since we have so much volume traded, it's also very easy to, enter and exit your trading positions. So this is a very good market for traders. And the first key concept we need to understand here is what is, a currency pair. All right, so let's say you're trading the US dollar in the Forex market. In order to trade the US dollar and in order to measure the value of the US dollar, you always need to measure the dollar in another currency. So if you measure the US dollar in, for example, euro, this is one of the largest currency pairs in the world, then we write it as this. This right here is our currency we are trading, and they usually call it the base currency. So this is the base currency, and the currency we use to measure the value of the base currency is called the quote currency. Quote, that is the right spelling, right? Quote. So in this case, we are trading the US dollar and we measure the value of the US dollar in euro. Let's jump back into the chart and take a look at how this can look like. So as you can see up in the corner, right now we are on the USD Euro chart. And right now, as you can see up here, right now the USD Euro is at 0.8422. What this means is that the US dollar is right now worth 0.8422 euros. So you can exchange one US dollar for 0.8422 euros. But as you can see here, the US dollar have recently risen in value when we measure it in euro. But if we, for example, look here instead, earlier, if you look here, June 16, then $1 was worth 0.8254 euros. So as you can see, if we sold our US dollar up here instead of down there, we would have gotten more euro for our US dollar. And if you think this sounds confusing, don't worry, because this is often, I know it was confusing for me in the beginning as well. This whole thing with currency pairs does take a while to get used to, and it can be very confusing in the beginning. But don't worry, just stick around, and if you continue to think about it and look at charts, it will make sense after a while. So let's, for example, take a look at the US dollar measured in Japanese yen instead. So it might make more sense when we take a look at multiple currency pairs here. And if you're using TradingView, this is the program I'm using to search for Forex. You go up here in the corner, you click here, and if you want to, you can see you can choose here. You can choose all, you can choose Forex. So right now we have Forex selected, and you search for, if you want to search for US dollar measured in Japanese yen, you type USD, that stands for US dollar, and Japanese yen is JPY. So then you get the chart here, USD JPY, and then you click right there. So as you can see here we have a whole other number. the USD JPY right now is around 110. So this means that $1 is worth 110 Japanese yen. So as you can see here we still have the US dollar, but now we are measuring in another currency. So this will give us a whole other number. All right, so now let's switch our attention to another concept that is important in Forex trading. And this is that when you have a currency pair, right now we are back on the US dollar measured in euro. And as you can see, recently the US dollar have gone up. But because the US dollar have gone up when we measure in euro, this must mean that the euro measured in dollar has gone down. So the opposite chart must be true if we look at the euro USD chart. So let's take a look at that chart. Here we have the euro measured in US dollars. And as you can see, this is pretty much the exact opposite of our previous chart. So you can see the US dollar, it went up like this, and just as a mirror, the euro went down when measured in US dollar. So as you can see right now, 1 euro is worth 1.186 around there US dollar. So this is very important that when one currency pair goes up, the opposite currency pair of course goes down. This is simple logic, but it might also take a while to get used to. But don't worry if it feels a bit complicated right now. And I'm not sure if you are from the US or where you are from, but I am from Sweden. So let's take a look here. Let's actually search for our Swedish krona, I think you say in English. So then let's search for US dollar measured in SEK. So this is the US dollar measured in the Swedish krona. I think it's around 9 or something like that. 1 US dollar is worth 8.60 Swedish krona. So if you want to exchange 1 US dollar, you will get 8.60 Swedish krona. But all right, guys, let's finish this video off by taking a look at some trading strategies which you can use when you trade Forex. And the platform I'm using right now is TradingView. And by the way, if you're interested in getting started with TradingView, I will actually have an affiliate link both in the top comment as well as in the description, which you can use to sign up for free if you want to. And then later on, you can get up to a $30 bonus. So make sure to check that out if you want to. And also, if you during this video have found any value so far, it's always super awesome when you show that by dropping a like. But all right, so as for trading strategies, the same strategies that applies, in pretty much all technical analysis, crypto trading, swing trading, and so on and so forth, also applies in Forex trading. So one such concept is the support and resistance concept. So I actually see something right away here. So if you take a look right here, as you can see, we saw sellers coming in this market right here on June 7. We went down, and then we went up and sort of tested this area once again as resistance. So we saw, resistance 2 times at this level, right? Then right here, we broke this one to the upside, saw a nice continuation after we broke that one. And then we went down and sort of retested previous resistance, right, as support. So this is a very common principle in trading that when we break resistance, a common principle is that we flip that and become support. So this is a first sort of strategy you can use when trading Forex, the simple support and resistance strategy. And this is actually, it sounds very easy in the beginning, but this is a very useful strategy, and it takes a lot of time and practice to actually master, simple support and resistance. So that is, in my opinion, a very good way to start to really try to master your, support and resistance skills. Another strategy, another thing you can apply to your trading is Japanese candlestick patterns. And what is this? Well, this is basically patterns that appear only by looking at the candlesticks. For example, right here, you can see we have 2 candlesticks. We have one red, and then we have a green candlestick that sort of engulfs the previous red one. This is an example of a Japanese candlestick pattern, and this is actually what we call a bullish engulfing pattern. And that is a bullish pattern indicating a potential reversal. And after this one appeared, we actually saw a very nice impulse to the upside. What more can we say here? Well, right here on the resistance, here we actually have a combination of many bullish variables. First of all, we have a support. First of all, we have a support level, and we also have a piercing pattern. So this is another bullish pattern that indicates a potential reversal, especially if we haven't seen a decline prior to this pattern. And after this one, we actually saw a nice bounce and a nice continuation here to the upside. But in this video, we don't really have time to go in detail in any trading strategy. I just wanted to, real quick, mention a few trading strategies that you can use. And if I have any videos, I will link some additional, content up in the corner in the eye. But alright guys, that's pretty much it for this video. If you feel like you got any kind of help or value, then please consider dropping a like. And if you guys are interested in more, then don't hesitate to subscribe and hit that notification bell. I hope you guys have an awesome day, and I hope I will catch you guys in the next video. But for now guys, take care. Ciao ciao.